So, in today's conversation, I really want to have a clear discussion with you about the top 10 cheapest business loans to cover payroll and pay suppliers. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sturdy Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka, and let's roll. In today's conversation, I want to talk to you about the top 10 cheapest business loans to cover payroll and pay suppliers. So when we talk about that, we are actually talking about working capital loans. What is it? A working capital loan is a loan that is taken to finance a company's everyday operations. And this kind of loans are not used to buy long-term assets or investments and are instead used to provide the working capital that covers a company's short-term operational needs, right? So here I'm talking about everything from payroll, rents, and debt payments. So in this way, working capital loans are simply corporate debt borrowings that are used by a company to actually finance its daily operations. So you really have to understand that. And the reason why a company needs working capital funding is very simple. If you think about it, many companies do not have stable or predictable revenue throughout the year. And if you are in a cyclical industry or a seasonal industry where, say, you make your money in the third quarter or fourth quarter of the year, so what happens for the first 6 months of the year? You need some cash to cover your operations, right? If you're selling through the holidays, for example, and you will have to actually sustain your operations for the first 9 months of the year, you need working capital. So this is the kind of logic behind working capital funding. And you have to understand that working capital funding is in addition to all kinds of business financing that you may have. For example, term loans, business lines of credit, or invoice financing. So in case you don't get working capital loans, you can actually try applying for other kinds of business financing. What are the pros and cons of working capital loans? Now, the immediate benefit of a working capital loan is that it's very easy to obtain and lets business owners efficiently cover any gaps in working capital expenditures. The other noticeable advantage is that it is a form of debt financing and does not require an equity transaction, right? So if you want to maintain full control of your company, then it's kind of cool to go with the working capital route. Some working capital loans are unsecured. If that's the case, the company is not required to put down any collateral to secure the loan. However, only companies or business owners with a high credit rating are eligible for an unsecured loan, and businesses with a little to no credit have to securitize, in other words, to collateralize the loan. And that's a drawback. That's the big disadvantage here. And a working capital loan that needs asset collateral can be a drawback in the loan process. However, there are other potential drawbacks with this type of working capital loan. For example, interest rates are high in order to compensate the lending institution for risk. Besides, working capital loans are often tied to a business owner's personal credit, and any missed payment or default may hurt his or her credit score. And one thing I also want to say here is that, of course, I'm going to show you very quickly the rundown, but how do you get a working capital loan? It really depends. You can get those loans from a variety of sources, including online lenders, banks, and credit unions. And banks and credit unions are options for established businesses with collateral and strong credit, while online lenders and alternative lenders may provide options for borrowers with spotty credit history. So it depends on what kind of category you find yourself into. And online or alternative lenders will typically charge higher APRs than banks and credit unions. So it just comes with the territory. So you got to figure out exactly whether or not a working capital is a good idea for you, for your business right now. And you got to look at a couple of factors. You got to think about the seasonality of your business, the revenue cycle, what kind of funds you need and why do you need them? Do you need funding for expansion? Do you need funding to pay suppliers? Do you need funding to seize an opportunity, as a great business opportunity? you have all kinds of reasons why entrepreneurs every day in this country are making decisions to apply for working capital loans. One thing I just want you to remember though is that you will be paying a higher APR than if you were to wait or if you were to go to a traditional bank or credit union. So this is kind of important. And so if you don't qualify for a working capital loan, as I said earlier, you have other options. You have term loans, you have business lines of credit, you have SBA loans, you have invoice factoring, you have business credit cards. You have a constellation of funding sources that you can use to grow your business, to maintain your business, and to actually grow it over time. Before I get into the actual rankings, please check out this short evaluation video. We do have a strong methodology in place in this show to review, categorize, and I would say evaluate all the loans, all the credit cards, and all the funding sources that we review on this show. Check this out. All right, folks. Number 10, we have Bluevine. Our score, 7.5 over 10. Bluevine is kind of cool when it comes to business lines of credit. And with this, if you're looking for a cheap loan to cover payroll and pay suppliers, Bluevine is kind of cool because you don't pay no origination or a monthly maintenance fee, but you have to expect weekly repayments. And what are the pros and cons here? Funding within 2 business days, no origination, maintenance, or draw fees, minimal eligibility requirements. And the cons, you have $15 fee for same-day funding, weekly repayments, and potentially high APRs. And what are the details of this offer from Bluevine? The loan amount ranges from $5,000 to $250,000, and the loan term is 6 to 12 months. You got to have a minimum credit score that oscillates between 600 and 650. And the APR starts at 4.8%. And the requirements are that you have to be in business for 2 years and you got to have at least $30,000 in monthly revenue. Now, the thing is that Bluevine has been known to actually relax those restrictions. So we've seen people who got approved even though they were in business for less than 6 months and they were making 10 grand a month in terms of revenue. Number 9, we have Foundation. Our score, 8 over 10. Here you can get a working capital loan of up to $500,000 with this award-winning online lender. So Foundation is an online lender, and we love the fact that they're pretty flexible here. So maximum loan amount $500,000, minimum loan amount $20,000, right? And the APR fluctuates between 8% and 30%. The requirements are that you have to be in business for 12 months at least. You got to have at least 3 employees and make at least $100,000 in annual revenue. And credit score between 550 and 600 minimum. And the loan term 12 to 48 months. And we know that usually when you have a working capital loan, it's not really you need the money to actually fund operations, to pay for payroll and pay suppliers and other stuff. But what we love with Foundation is that they give you options. So you can actually negotiate the repayment. You can do it monthly. You can do it bi-monthly rather. So it's really up to you. And the only restriction they have is that you cannot live or operate your business in Nevada. Number 8, folks, we have Ladder Capital. Our score, 8 over 10. So Ladder Capital is an RBF lender, so a revenue-based lender that specializes in funding for tech startups. So if you are in that space, you might be interested. And the Ladder Capital's working capital model works like a fixed-term loan and a line of credit. So you have a hybrid. So after you've paid off your first loan, you can apply for another round of funding. It's really designed to be an alternative to venture capital funding when your business is still in its early stages. So when I said it's for tech startups, the word tech startups here actually encompasses a large constellation of industries and sectors. So if you're working on software, if you're working on hardware, if you're doing some anything, if you're doing e-commerce, they will fund you, and their funding are pretty. Their funding is pretty generous. So they will fund you from 50,000 all the way to $1 million. So this is pretty cool. In terms of the cost is that RBF providers like Ladder Capital, they multiply your loan amount by a number called a repayment cap, often between 0.4x and 2x. That means that your business pays between 0.4 and 2 times the amount that it borrows when it takes out a revenue-based financing loan, no matter how much time it takes to pay it back. Number 7, folks, we have Loan Builder, a PayPal service. Our score, 8.5 over 10. Loan Builder is actually provided by PayPal, and with them you have quick term loans with a high potential APR. And this is great for newer businesses that need a small to mid-sized loan. And you can pick something else if you can qualify for lower rates and longer loan terms. So minimum amount $5,000, maximum amount $500,000, and the loan term 3 months to 12 months. Sometimes they will extend it to 24 months depending on your situation. Minimum credit score 550, and the APR oscillates between 6.5 to 19.5%. And they want you, in terms of annual business revenue, PayPal is very flexible here. They want you to be in business for at least 9 months. Sometimes 6 months is okay also. They want you to have a minimum credit score of 550, and your annual business revenue should be around 40,000 or 44,000. So really, it's pretty flexible. It's like 4,000, less than 4,000 a month. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. We are still having a conversation about the top 10 cheapest business loans to cover payroll and pay suppliers. And the number 6, we have On Deck. Our score, 8.5 over 10. And On Deck is pretty cool because this is one of the best alternatives for fast financing for startups and fair credit borrowers. And of course, it comes with higher rates, but it's okay. And so On Deck offers a fast alternative to bank loans for businesses that are struggling to qualify for traditional financing. And but the high interest rates combined with daily or weekly repayments can put a strain in your budget. So you really want to pay attention to those elements before applying for an On Deck loan. And minimum 5,000, maximum $250,000. And so the loan term 3 to 12 months. Minimum credit score 600, and the APR as low as 35%. So you have to understand it's very high here, right? And they want you to be in business for 1 year at least, and they want you to have $100,000 in annual revenue minimum, 600 to 550 to 600 personal credit score minimum. And the pros: same day funding available on term loans and lines of credit. You can build your business credit history with them. They have reduced or waived fees for repeat borrowers, and the cons: high APR starting at 35%, and monthly maintenance fee of $20 on line of credit, and you have choice between prepayment penalty or higher rates. Number 5, folks, we have Fundbox. Our score, 9 over 10. Here, minimum amount funded, $1,000, maximum $150,000, and the loan term 12 to 24 weeks. Minimum credit score 600, APR 5%. This is pretty cool. And you need to have an established business. In other words, you got to be in operations for at least 1 year. And the pros: there is no paperwork. And we love the fact that when you apply for a Fundbox working capital loan, the application does not affect your credit score. There are no draw fees. And the cons: you must use eligible accounting software to qualify. And you might have to make weekly repayments, and there are higher rates for longer terms. Number 4, folks, we have Lending Club. Our score, 9 over 10, And lending clubs, low revenue requirements and minimum loan amounts make it a viable option for small businesses and startups. Minimum amount loaned to you, it's 5,000, and maximum half a million. And the loan term 12 to 60 months, and minimum credit score 580. In our view, this is one of the best working capital loans available out there for people who have spotty credit histories, and minimum credit score 580. Sometimes they will go as low as 550. And in terms of APR, you're looking at 12% to 29, or sometimes 30%. And requirements that you got to have a business, you got to be in business for at least 12 months, $50,000 at least in annual sales, no bankruptcies or tax liens, at least 20% ownership of the business, fair personal credit score or better. Okay, so the pros and cons here: low starting loan amounts for an online lender, no prepayment penalty. They will connect you with a lender if you don't qualify for a lending club loan. The cons: high minimum origination fee, relatively long turnaround for an online lender, and collateral may be required on loans over $100,000. Number 3, folks, we have here Smart Biz. When it comes to the cheapest business loans to cover payroll and pay suppliers, Smart Biz is a great option. Our score 9.5 over 10, and the loan amount here oscillates between $30,000 and $5 million, and the loan term 10 to 25 years. Minimum credit score 600, and the APR oscillates between 4.75% to 7%. So this is pretty cool. And the requirements, they want you to have a minimum credit score of 600, and you got to be a U.S. citizen or permanent resident, 2 years in business, and at least $50,000 in annual revenue, no outstanding tax liens, no bankruptcies or foreclosures in the past 3 years. So the pros and cons here: they shorten SBA loan turnaround time, less time to fill out forms, non-SBA funding also available. So SmartBiz has a wide variety of loan products for small businesses. The cons: larger loans take up to 30 days, packaging and referral fees on top of other SBA fees, and prepayment penalties during the first 3 years of the loan term. Number 2, folks, we have Deal Struck. Our score 9.5 over 10. With Deal Struck, you get quick financing from a lender that understands your business's needs, but they lack transparency on offer details. So when we went to their website, it was pretty, I would say, pretty fuzzy in trying to understand exactly what they're charging borrowers and other terms and conditions pertaining to the loan. But we still believe this is a great choice, based on their offer. So they have minimum amount $25,000, maximum amount $500,000, the loan term up to 48 months. So this is pretty cool. Minimum credit score is 600, and the APR starts at 10%. And so you gotta have 1 year in business and make 150,000 in annual revenue. We've seen cases where they drop that minimum to 75,000. And in terms of their offer, you have inventory lines of credit, you have accounts receivable lines of credit, and they have working capital loans, and they also have what we love with Deal Struck's working capital loans in general is that you have personalized loans. In other words, they provide loans that account for needs and quirks of your business and industry. You get cash in days, so they have a quick turnaround, even for an online lender, with funds dispersed in as little as 3 days, and it's very easy to use. The process is straightforward, simple, and so this is pretty cool. And we love. But one thing you need to understand, and some of the pros. So the pros are personalized loans. You get cash in days and easy to use. The cons: prepayment penalty, high origination fee, and weekly or bi-weekly repayments. Number 1, folks, when it comes to the top 10 cheapest business loans to cover payroll and pay suppliers, Funding Circle. Our score 10 over 10. Funding Circle is just fantastic. We love this company. They've been in business for a while, and they do great stuff. Great job. And it's basically, Funding Circle is a peer-to-peer lender that offers competitive rates and has a reputation for strong customer service. It's available to business owners with fair credit and doesn't have any revenue requirements, but its high starting amount and 2-year business history requirements could make it a better option for more established businesses. It also charges a relatively high origination fee compared to other online lenders. So the amounts fluctuate between 5,000 to half a million. Loan term 3 to 120 months, so 3 months to 120 months. Minimum credit score 600 to 620. APR 11.5% to 39%. Okay, so what are the pros and cons here? Pros: no minimum revenue requirements. They accept fair credit, no prepayment penalties, strong reputation for customer service. The cons here: relatively high origination fee, high minimum loan amount compared to the competition, and turnaround of at least 5 business days. All right, folks. This was it for today's conversation. I really appreciate your attention. To recap, what are the top 10 cheapest business loans to cover payroll and pay suppliers? Number 1, we have Funding Circle, 10 over 10. Number 2, we have Deal Struck, 9.5 over 10. Number 3, we have Smart Bees, 9.5 over 10. Number 4, we have Lending Club, 9 over 10. Number 5, we have Fundbox, 9 over 10. Number 6, we have On Deck, 8.5 over 10. Number 7, we have Loan Builder, a PayPal service, 8.5 over 10. Number 8, we have Ladder Capital, 8 over 10. Number 9, we have Foundation, 8 over 10. And number 10, we have Blue Vine, 7.5 over 10. Thank you so much for your attention once again, and I'll see you next time. But until then, remember, stay marvelous.